Welcome everyone, it's the Crypto Lark and I'm super excited to have with me today Simon Dixon. He is a Bitcoin OG and also the CEO and co-founder of Bank to the Future. Simon, welcome on the show.
Thanks for having me.
Absolute pleasure. Now, before we start talking about Bank to the Future and some of the other things that we're going to get to later in the chat, the first bit of our chat is really going to be talking about Bitcoin, some of the different ideas about Bitcoin. You've been in the space for a very long time and you've seen a lot in your days. So I want to share a bit of that knowledge of yours with the audience. So the market right now and market trends overall, you've been through a few price crashes. What are some lessons that you've learned through that? And what are some valuable tips or maybe commentary you can share with the audience?
Okay, sure. So yeah, since I was fortunately invited to the first Bitcoin conference in the world, and I came in for missionary reasons. I thought it was really interesting that technology could be used to create an entire new monetary system. So when I joined, it was really, really unclear whether such a crazy, audacious goal could ever succeed. And so really, because I was in it for mission reasons, I never really saw it as an investment from the beginning. And more, wouldn't it be amazing if this could happen? And so really that's taken me from having, you know, seeing my $30 Bitcoin crash to $3, seeing my $1,250 Bitcoin crash to $250, and my to $20,000 Bitcoin crash to approximately $3,000 or wherever we go next. And so really I've, over the years, I've learned that most of the, having known so many people, the ones that are wealthy kind of all made it in a bear market. They were either early adopters that went through all the troughs and the ups and the downs, and the times when people are most telling you to sell and there's most reasons to sell are really the times when I've seen real wealth created. And then they made sure that they were in a position whereby they had enough, you know, dollars or local currency in order to cover their everyday expenses and go in this for the long term and the effects that Bitcoin actually gives, given that it's a fixed supply. There's only currently 17.5 million of them.
And how many millions have already been lost?
Exactly. I mean, let's take a guess. No one really knows, but let's say 5 million have been lost. And that number is only going to increase because, unfortunately, the responsibility of keeping your own money means that you either give it to someone else, like Quadrica, and then they lose them.
Exactly.
Or you lose them yourself. And, you know, there is a big responsibility that comes with giving people the ability to own their own money. And unfortunately, that leads to an ever decreasing supply. And as Bitcoin becomes more and more useful to more and more people, or the traditional financial system becomes less and less useful to more and more people, then the demand for Bitcoin increases. And the only way to take that demand out is either in the new supply, but we haven't got much new supply coming, exactly, or an increase in the price. And that's the only way to increase the market cap. On the short term, that's never really as clear, because if you're looking at the short term, you know, there's lots of reasons to think this is well, really, I'd say the investment thesis is quite simple for me. It is that one, you understand the economics. I just described the brief economics. And the second is that the Bitcoin is what I call a speculative store of value. And by speculative store of value, I mean gold is already a store of value. But people are speculating on whether Bitcoin will become a store of value. And a store of value means that you maintain your value, not increase your value. Mm-hmm. And so once Bitcoin becomes a non-speculative store of value, it means that it becomes a good unit of account and medium of exchange, because the value doesn't really change relative to what's happening in the economy, inflation, wealth.
That's right.
And all that.
We're very far away currently from it being a unit of account. I mean, it's definitely not that yet. Maybe someday. Might take quite a few years.
Well, it's quite simple. It will be a unit of account once you can predict that you can pay your rent or mortgage every month and it costs you virtually the same. That's when you know it's got there. But the speculative part of it is where the opportunity is, because I wholeheartedly believe that Bitcoin will become, you know, our world's best shot at achieving sound money that we've ever seen. But that is speculative because the vast majority of the world still thinks that Bitcoin is a Ponzi scheme, a currency for drug dealers, or a scam. And so as long as scheme and a scam, then you have the opportunity to accumulate wealth if it does become a store of value, just like gold, but better.
That's right. And we are overcoming those bad stereotypes, and the news media, they love to throw it out all the time because that's what they do. But if you actually look at what's going on in the background, we see, for example, what's happening with Wall Street and Bakkt and Fidelity and all these big players. That's a pretty serious sign to me. What are your thoughts on Bakkt?
So Bakkt is a serious exchange that has a lot on the line if they get it wrong. And I kind of break the traditional financial system and the Bitcoin ecosystem into two. And both of them are actually needed. One of them, most people tend to take one side or the other. One side is actually the traditionally regulated institution that allows people to onboard from fiat currency into cryptocurrency. Now, up until now, that space has been dominated by exchanges which are either straight up scammers or people that are in it for the right reason and have had a really hard time with banking, or people that have done it all the way as much as they can in a completely changing regulated environment where the bar always changes. But now we're getting the next wave of institutions that are going to do everything by every regulation. Now, regulation comes with both a benefit and a challenge. The benefit is that it does create more trust in the system because, you know, with a regulated institution, at least somebody is checking that their reserves are there, your money is there. But it also comes with a challenge, and that is that regulators and governments give regulated institutions the ability to take your money, do things with your money in a regulated environment. And so the banking system has its challenges because most people think their money is safe because it's regulated, but they don't own it. They can't necessarily spend it how they want if the bank thinks that they shouldn't spend it that way. And also they can rehypothecate it and create systemic risk in the entire system, as we saw in 2008, and as we're about to see again at some point.
Oh, exactly. I can't believe the debt bubble that's building up right now.
Well, we entered, you know, the US went into a financial crisis because of some crazy little event that happened in Iceland. And that shows how intertwined the system is, that an island with a population of a bit over 200,000 can take a subprime crisis to the next level, to where it becomes a global crisis. And they started it with 2 trillion of debt, and now they've got 22 trillion of debt, and the entire world's got $240 trillion of debt, and that doesn't even include the derivatives. So that's not being paid off. That is definitely not being paid off. They're going to have to do some serious financial engineering in order to figure out what to do with that one. But you are betting, and this is what I like people to think. So I didn't finish off that thought because there's the second market, which is you owning your own money, spending your own money, and Bitcoin is the only way to do that at the moment. Storing your money on a hardware wallet where you can own it, you can control it, spending it as you wish, person to person, rather than via an exchange or a third party, and the monetary policy we talked about. Those two economies exist. Now, Bakkt is playing in the second, and that is, you know, cash settled futures, and these are complicated terms for those of you that are not, you know, financially savvy, but it's just a way of allowing an institution to onboard into the crypto space in products that they understand, in a way that they understand, and in a regulated environment which can onboard a massive chunk of money that wasn't able to onboard into this ecosystem. Now, you've got these two markets. You've got Bitcoin the way it was designed to be, which is, I think, where everyone should get eventually. And then you've got the regulated onboarding market of bringing new people in a way that they're more comfortable with, in a way where they don't have to take full responsibility of their money. Both have upsides, both have downsides. But the best that I think people will do is that they'll onboard into the regulated environment because it's quite, or they might get comfortable enough, educated enough to onboard straight into the way that it was designed to be. But eventually, if the economics of Bitcoin pay out, this money that you onboarded in a regulated environment is going to cause you a challenge. So your job is to try and get it into your own hardware wallet, but you shouldn't be doing that until you're educated on how to secure it and store it.
Exactly.
And so this is a real friction and challenge that we need to overcome. Now, the worst that could happen is if you onboard into the regulated environment, and then you don't educate yourself here and you don't get it here fast enough, then you might be in a where the economics of Bitcoin has played out, that your wealth has increased so much, if everything goes the way it was designed to go, that you'll start to experience that you can't own your own money, you can't spend your own money, because once it's worth a set amount of money, it becomes very hard to move it out and get it out, because you start hitting the traditional financial censorship world. Most people don't experience the problem of not owning their own money because they're living paycheck to paycheck, credit card to credit charge, and that system works quite well. But when you try and move larger sums of money, you start to realize how sensitive this is, how problematic this is. And actually, in very often times, you could end up the person in Cyprus that had over $100,000 in their account, and ended up 50% of that being used to bail out the banking system. And that's where you're trying to move from. So if you're going in on the regulated environment, that's safe if you don't know what you're doing, but you've got to get over here as fast as you can. And that's kind of the cycle. And if you get it wrong, you might put your money in the wrong exchange in the unregulated environment. And if you don't get it here as fast as you can, you're one of those victims that you read about in the news that the media loves to talk about, because you let somebody else own your money, and that wasn't Bitcoin.
That's one of the big challenges in the space right now, is bringing people in, but doing it in a secure way, bringing people in and so they don't lose their Bitcoin, so they don't get scammed. And it's very predatory what we see going on out there. We have bad exchanges which appear to be good and people use them for a long time, then they exit scam or they turn out to be insolvent or whatever it might be. And then of course there's the straight up scams and the difficulty and just people going through that learning curve when they have their busy lives, they have their kids and their job and all this stuff, and then they got to go through figuring out how to move Bitcoin around and all these different things and how to safely store it. And it takes a little bit of time, not that much time, but a little bit of time. So it's like you said, there will be people who will go for those more traditional routes, but they come with their own problems.
Yeah. And our job as entrepreneurs is to create the solutions to make that easy for you. But unfortunately, we're not quite there. But there is a ginormous, population of entrepreneurs working on solutions to make that easier, because this is it is a very complicated problem to solve, but it shouldn't be complicated to you, the normal user. And then our job as entrepreneurs, and what I've been working on over the years, is investing in entrepreneurs and creating those solutions, so that when, I just hope we don't take so long that we're like, for example, in 2017, there were too many people onboarding into the industry. All of the companies that we'd invested in, they couldn't deliver customer service. People were asking them questions. They just couldn't answer the questions. The whole industry was slammed because in a frenzy, everyone was trying to get into crypto. Now, unfortunately, that will happen again. Yep. And I think that will be driven by a problem in the traditional financial system. But really, the bear market is the time when you can get customer service, when the people that are around during the bear market are normally the people that are meant to be around. Is, the strange things all pops up in the bull market, because they're taking advantage of the fact that there's so many people trying to get into this new technology, trying to onboard into this new opportunity. And I think, the reason I like giving content is just to try and get more people in a calm environment just like this. If it's right for them, of course. And I think it's an important thing to understand. And the one message I want people to understand is that no matter what you do, you are a speculator. People don't think of themselves as a speculator. But if you leave your money in a bank, you're speculating on the credit risk of that bank and the financial system and the regulator that is underpinning that system. If you put your money on real estate and you buy your house, you're speculating on that banks will continue to push money into the mortgage markets, which will continue pushing up the price of your property. If you do nothing, you are speculating that the system's going to continue working, and that inflation will be delivered at a set rate, and all these types of things. So if you make no decision, you're still speculating. So you might as well make a speculation based upon, you know, education and what you think is going to happen and what's going to come out. And we all need to make that decision.
That's a fantastic point. And history is full of examples of people being caught at unawares when their local banking systems fail, or their fiat currencies fail, or whatever it might be. And it's become so normal, the banking system, the way we operate with banks and loans and debt and all of these things, and we're told debt's healthy and it's great to have lots of debt, and all these things are pushed on us, and it becomes so normal that we forget that there's other options, that there is something different, because now there is something different. There wasn't always, but now we have this amazing ability, or maybe golden past, but now we have this amazing ability to have real sound digital money, and it's amazing.
Yeah, and it's the most exciting time to be alive in financial history, and the vast majority of the world don't know that. And you are going to make a choice, and people do need to make their choice. And, you know, someone that's not completely certain, I think it's a very wise move to start hedging with a small portion of money that you can afford to speculate and lose if you're not fully there, just to test out this technology, because trying to onboard into this when you have to is not an easy experience, as we saw in 2017.
So it's good to get in now. The fees are low, and you can get customer service from exchanges and all these different things. Now, we've been talking only about Bitcoin so far. What is your opinion on, I guess, Bitcoin maximalism? Do you see value in some of the other altcoins that exist?
Yes. So Bitcoin maximalism, I think, is my observation over the years, is because I've been in a market where it was only Bitcoin. And then I've been in a market where a bunch of scammers tried to copy Bitcoin and rip people off. I've been in a market where legitimate altcoins tried to create something more technologically superior to Bitcoin. I've been in a market where Ethereum was funded by the Bitcoin community as a way to try and advance the technology. I've been in a market where the friction between Ethereum and Bitcoin actually came along as it started to look like it might take the first and second spot, and that might flip over at some point. Also been in an environment where people used Ethereum to create a million different things and create the market that we're kind of in right now. And I've been in a market where people made vast wealth through those tokens and also lost wealth through those tokens. And now we're in an environment where all of that is trying to be done in a regulated environment through securities tokens. The one thing that I've learned over those years is that there is a lot of friction between people's misunderstanding. And so it all depends when you came in. There are people that came in at the Ethereum level that don't know any of the history. There are people that came when it was only Bitcoin, and they have lots of friction around what Bitcoin should be. So you're giving a few case studies on that. You've got the Bitcoin maximalist, someone like Roger Ver, that then came along and Bitcoin became something different to what he thought it would become. And we had this whole drama whereby nobody could control Bitcoin. The miners tried to control Bitcoin. They couldn't change it. The businesses colluded and tried to get together to change Bitcoin the way it would suit their business. They couldn't change it. The developers tried to exercise unnecessary influence over the code. They couldn't get the way that they wanted without a massive amount of fight and friction. The users came together and said, we're more important. They tried to actually exercise their influence. And so while many people criticize Bitcoin for having pockets of centralization like mining and development, what we've seen over history is that Bitcoin is the only cryptocurrency that we've seen that is able to resist pockets of centralization taking over the coin. And so therefore, for that reason and that reason alone, it's because it didn't have a founder. It was created at a time when nobody cared. It got distributed at a time when nobody cared. And for those reasons, it's the most decentralized. And that decentralization is really, really important for achieving sound money, because we don't want to recreate the Federal Reserve within Bitcoin. And so that's a really important feature of Bitcoin. And what is, in my opinion, creates it, zero competition for being sound money. Now, over time, people have said, well, it should be a medium exchange, and then they've created things like Bitcoin Cash because they collude, got an economy around a different use case, and that's fine. But in my mind, Bitcoin maximalism is about that Bitcoin is our only shot, and I agree with this, at achieving sound money. What that doesn't mean is that Ethereum might create disruption in capital markets. Because if you're trying to create a system for tokenization and all securities are going to be tokenized, then really you don't want a fixed supply like you would have with Bitcoin. You want an infinite supply based upon the demand for the smart contracts and the tokens. And really that wouldn't be the same investment thesis, but people think that Ethereum is kind of like this fixed supply thing like Bitcoin and might take over Bitcoin, which is a very silly thought. Even if it does, the use case of disruption in capital markets, which is what Ethereum has become, you're comparing, is sound money, a sound monetary system, a better investment than disruption in capital markets? Or is it better than medium of exchange, a competition to a payment network? These are very different things. So people get this whole friction and argument is very problematic because it's caused lots of infighting in our industry and us showing our worth. It used to be Bitcoin versus the banks. It's now everyone saying this coin is shit and this coin is great. And it's put our industry back so much because people are, at the end, it is a free market. We can't control it. Everyone has the right to do what they want to do. And that is why Bitcoin is, it's freedom of speech. But it's created lots of friction, lots of challenge where people are saying, I'm a Bitcoin maximalist and identified with that tribe. And I completely get that as the sound money thing, and Lightning Network as a medium of exchange and everything, if that happens. Ethereum disruption in capital markets. And then also because Ethereum is, at the end of the day, it doesn't have the same properties as Bitcoin. It does have a central promoting group. It was created by a person that needed to go out and sell something to people, investors, and a vision, which Bitcoin didn't. Then you have lots of people that say, well, I can do that better, and I can do Tron, and I can do EOS. And well, actually, we can get cheaper and faster transactions that can scale to the world to create disruption in different user case if I make it more centralized, which is EOS is a more centralized version of Ethereum, which makes it cheaper, faster, and more scalable. The ultimate scalability is PayPal, where they just have their own database. And we're just seeing this level of friction and really lots of people that made, and you look at things like Ripple, they're trying to create disruption with Swift. There was a lot of friction because they created a cryptocurrency, XRP, that wasn't originally created to achieve that goal, but now they're integrating it into their system. And really someone saying Bitcoin is better than Ripple is it's the same thing. It's sound money versus a company that's trying to compete with Swift, make bank transfers cheaper. Completely different things. And so comparing these things, a really long answer, but people come with their use case of what they think it is, and then they judge everything else based upon that, thinking that they're the same thing. And it's because there's so much confusion in the market, and having been involved with this market, I've seen how different use cases congregate around different things. And I'd be delighted if everything ended up with tokens on, the liquid network on Bitcoin, and the medium of exchange and unit of account happened somehow on the Lightning Network, and Bitcoin main chain became a store of value. If Bitcoin took all those use cases, great. My guess is that the ability to capture all those different things is going to be very hard to achieve, and therefore people will try and do that in a better way, and that will create more speculative opportunities to speculate on top of whether Bitcoin becomes a store of value, and then whether Ethereum becomes disruption in capital markets, and whether Tron does something in the in the gaming market. I'm not too familiar with the gaming market, and people can speculate on that, but they just need to understand what they're doing. It's a speculative store of value, and then taking an infinite more risk on top of that, which creates infinite more return and ability to lose your money. if things go wrong.
That's it. That's very well said. And it really comes down to Bitcoin's amazing, but it doesn't have to do everything. This is what it comes back to. Maybe it will. Like I said, maybe we'll see a situation where Bitcoin kind of does most of the things you'd want it to do or can imagine it to do, but it doesn't need to do all that. And there will be this large ecosystem, and those other ecosystem projects don't take away from the awesomeness of Bitcoin in general. So that's a really important thing. Now, you have just come back from the Satoshi Roundtable, and you've gone to every one so far. So just for anyone who doesn't know, just tell us really quickly what the Satoshi Roundtable is, and how has that event changed over the years? And I guess how has that community event evolved with time?
Sure. So we're on the 5th one now. It was created by Bruce Fenton that wanted to create, and you know, there's been a lot of conferences. My first conference was the one in 2011 in Prague, where it was pretty much 20 computer science geeks and 20 activists discussing how this thing called Bitcoin might change the world. And really the venue, I remember the after party can only be described as a crack den, where you had to have a special code to get in, and everyone was wearing an anonymous mask in this and hoodies and stuff. And actually, I bought a Mars bar for $1 at that event.
That's amazing.
Yeah.
It's expensive Mars bar these days.
Yeah, so we've all done our Bitcoin pizza guide.
Absolutely, yeah.
Then yes, and so the events have, and then they've gone through different life cycles. There's this heavy Bitcoin developer conferences, and then there's things like Consensus, where you've just got this meat market of investors and people creating technology, and then the institutions joined at some point. That created a lot of friction when the banks joined and the corporations joined around blockchain. And then the interesting thing right now is that cycle has all evolved. Originally there was Bitcoin and everyone laughed at it. All the institutions kind of said this is not worth bothering with. Then it became something worth bothering with, and they tried to get rid of the word Bitcoin and use the word blockchain. And then they popularized the blockchain, but there was only really one thing worth that you could do something with, and that was Bitcoin. And so they really, the moment that the banks scammed themselves is when they actually started pitching blockchain, and that drove adoption to Bitcoin like we've never seen before. And then the corporations did the same, and then they tried to patent everything, create their own technology. They're still to this day trying to release something. We haven't seen anything released. And then really that we've been through those cycles. Now, what was really interesting is when you speak to an institution right now, like Fidelity and NASDAQ and people that are getting in the market, they're like, well, Bitcoin's the only thing that we can kind of deal with right now. It's the reputable thing. Everything else is too high risk for us, and we don't know whether it's what classification it is. And we don't know whether they're going to fork off, and we wouldn't know. It took us 1 year to integrate with Bitcoin. We wouldn't know what to do with an Ethereum, fork or something like that. And so they see Bitcoin as like this solid, non-risky thing that they can deal with, and everything else is just crazy things. And so it's really weird how that's kind of gone through this cycle. I'm sure they'll be creating stock markets for all sorts of things and crypto markets and everything in a year or two, but it's kind of just look at what we're doing as an industry, and then in 3 or 4 years the institutions are going through the same cycle. And that's the first time I've seen that. It's the first time I've seen that we're kind of a few years ahead of the traditional financial institutions. And that's what makes this really interesting, because that doesn't happen often. Normally the traditional financial institutions are getting into things that no one else sees, and then it ends up in a public offering when me and you and everyone else and retail can get involved. This is kind of the opposite. Retail are driving things, and then Wall Street are getting in later. And that's really interesting to see. And so we were talking about conference, Satoshi Roundtable. Yeah, sorry, I get this.
Yeah, that's okay. That's the importance of the trends,
Yeah, so Satoshi Roundtable, you kind of seen that. It's 5 years where Bruce kind of filters all the people that are really building stuff. So the CEOs of companies, the developers that are actually really building breakthrough technologies, And it's a great opportunity to kind of hang out for a few days in Cancun it is now, and just really discuss like under the hood Lightning Network, Liquid Network, what the companies are doing, what the institutions are doing, and really be in a Chatham House kind of environment where you're not going to get quoted in the media for saying something or something like that. But really, it's been through its own cycle as well. Like, the first one was about establishing itself, and they got really great people to come. And then once people realized everyone was coming, it became like a self-fulfilling prophecy. And the second one was just arguments about scaling, with, people doing hissy fits and running out of the rooms. And then the third one was kind of the same thing again. And, but the fourth and fifth one that we've just had right now, the fourth one was during the height of the bull market. So it's always in January or February. And so that was during the height of the bull market where it just became a bear and people had kind of lost about 50% of their crypto wealth. But it was still like, the ICO people were still holding on, trying to pitch something. And no one really could see where the market was going next. We kept thinking that it might just be a short-term blip, but we didn't realize we were going deep into a bear market. Some people did. And then this one is deep into a bear market, and the deep into a bear market ones are always the best. Because
the really serious people coming out, right?
Exactly that. Like, there was a real excitement around scaling, and a lot of the developers and CEOs and builders, and they were really grateful for this opportunity to just take a breath, to develop in an environment of a bit more calm. And the technology that's just being built right now is just ultra exciting what's happening. These are always the best times to be involved because the conversations are really serious. The right people are around. You're not distracted by the noise of too many scammers. We did get a few scammers, obviously, with Quadrica and whether that's a scam or I don't know. I haven't been looking too deeply. Yeah, and these are the great times. And the takeaway is just simple. No one's calming down. This technology is not being calmed down. It's being built to scale for the world. It's going to take time. We've come a tremendous way in 10 years. And what can happen? I've never known a fast changing environment like this. There's never a dull moment in crypto. And no matter what happens, there is, a real solid group of highly talented and intelligent people that see this as life changing and they can't imagine doing anything else. And they are going to keep building until this thing has the impact in the world that it deserves to have.
It's absolutely amazing, and it's like you said, people get rich during the bear markets, right? This is the time to invest, and it's psychologically the most difficult time for people to invest because this is the time of fear, right? There's so much fear going on. There has been a lot of fear for the past couple of months. People have been, afraid to put any money into cryptocurrencies, and yet this is the time when the smart money is getting in. And they'll get out when Bitcoin's up at 40, 50, whatever the next peak will be. And then, that's when everyone's buying, though. It's a funny circle, isn't it?
Yeah. I mean, this does take me back to my trading days. And I am grateful that I was trained in an institution before I hit this crypto world. But, when I worked in investment banking, I was a market maker for a couple of years, manipulating the London Stock Exchange alternative investment market through what they call market making.
Sounds like a good time.
And that was really using the market in order to drive fear and greed, and drive people to buy when you want them to buy, and drive people to sell when you want them to sell. And really, and having seen that from the inside, I know 90% of traders lose money. They make money at the 10% that make money are normally insiders, or they really are professionals and they do this for a career or properly. The only shot at someone that doesn't do this as an insider or professional is to actually become an investor. And the investors is where you can actually benefit from, getting rid of a lot of the noise, not being an insider and not necessarily being a full-time professional trader. But And so, you know, you've got to pick which one you are. You're either a professional trader, you're an insider, or you're an investor, or you sit out and you let other people do it for you. It's kind of your choice which one's right for you.
That's right. Now, I wanted to get around to talking about Bank to the Future before we finish up our chat here. So for anybody not familiar with what you guys are doing at Bank to the Future, can you give us a short version?
So banktothefuture.com was originally created for, co-founded by myself and Bliss Dixon in about 2010, when we were working on the regulations to allow people to invest online in private equity. I wrote a book called Bank to the Future that was about technology taking one step at a time, taking over all the different financial products that exist today. And I believe that financial technology and fintech companies were going to take over the financial market. And I didn't know which companies were going to succeed, so I wanted to be diversified across a large pool of companies. And so we created banktothefuture.com to build a community of investors that wanted to invest in financial technology. And we built a platform where, you know, spent a long time on the regulation, but wanted to create a global platform where in each country there's a definition of a qualifying investor. And we're allowing those that can invest in this asset class compliant with securities laws to be able to build a portfolio of companies in the financial technology space. Over the years, we've had some great investments and some failures. But whatever we're investing in, we allow people to co-invest with us. And we're kind of like a hybrid model between a venture capitalist and an online investment platform. So some of the companies include Shapeshift, Bitfinex, Bitstamp, Kraken, BitPay, and many others. There's some
very impressive names on there. I was astounded when I was looking. Wow, you guys have done equity rounds for like Bitfinex. That's awesome.
Yeah, and we've never really invested in marketing. We've always been kind of, you know, and so we get that reaction a lot. They're like, how did I not know about this? But over time, we've evolved to the different things. So we built, our bread and butter was equity. So we've got equity in a lot of these companies, and our investors have equity in a lot of these companies. You know, a lot of our investors have become wealthy because they invested in companies at a very low valuation, and now they're very high valuation. And so our average investor has invested in 14 different companies, and we allow people to invest at a low level, you know, about $1,000 minimum investment per deal. And they diversify widely because they you know, want to get exposure. And most of these companies will fail, but the ones that succeed are designed that their returns are so much higher that it makes up for the losses is the venture capital gain. Now over the years, we've adapted to different things. So obviously everything went into tokens. We were investors in the Ethereum ICO, before that Mastercoin and all the other things that we're trying to do Ethereum. And around about 2017, we did start offering tokens, but in compliance with securities laws. So we did, you know, anyone that did their syndicate through our platform, it was always done in compliance with securities laws. And so we allow people to diversify into tokens. And now we're really, we're working on a couple of things. Firstly is we're allowing our investors to sell those shares in the markets, whereby people that missed all those deals can now build a diversified portfolio into the most valuable companies in crypto. During a bear market, which is where I think the opportunity is, because these valuation increases happen during the bull. And we just launched into beta for our secondary market. So our investors can buy and sell Bitfinex shares at the moment. We've got about 10 of the largest companies in crypto that we're going to launch onto the secondary market once we get out of beta. So the end idea is that somebody will be able to come along and say, I want exposure to the growth of all the equity companies in crypto, and there'll be 10 of the largest names in crypto. They can put a bid in each of them. And our investors get their returns, they get on, and then there's a market for that. That's what we're working on at the moment. The other thing we're working on is moving into the securities token market. So I'm not 100% sold on the exact benefit that securities tokens bring, but our investors want them. And so we're iterating from our centralized model into a more decentralized model. We created the Bank to the Future token, which is a reward and membership token for all the investors on our platform. They get priority access to deals. Mm-hmm. And the way that we see our token is kind of Binance built an ecosystem around a cryptocurrency exchange using the token. We're looking to do the same for securities tokens.
Awesome.
We have equity in many of the major companies. We've got our secondary market. We've been working on regulation since 2010. And we've got a platform. We've got over 67, 68,000 accredited investors or qualifying investors on the platform. And so we created the token because they can get discounted trading fees, and we can build our securities token ecosystem around it. So we just launched the BF wallet, which is a wallet, the first wallet I know of for holding securities tokens, and we're about to launch our first. We're about to deliver our first security token onto that using the securitized protocol, who we're equity investors in through Bank to the Future. We're also investors in Polymath and various other players in this ecosystem. And we're just doing a lot of building, got our head down, and we just launched the BF wallet on iOS and Android, which people will be able to hold their securities token in compliance with international securities laws. So we're pretty excited about iterating over, but we're doing everything in a centralized way, and then kind of allowing people to take their equity into a security token on their wallet. And then we're integrating with many other partners that we're investors in, or like, you know, for example, trying to make it so it can easily go across to T0 or Open Finance or Securitize, or we're not quite sure where the market's going. But at the moment, everything seems to be being built on Ethereum. And there's kind of, that's where all the development is happening in the token ecosystem anyway.
That's incredibly exciting. I mean, everything that you've just said is wow. That's really exciting stuff, and I think that there's a lot of people out there in the audience who will probably really resonate with what you're saying here, because the security tokens market is aiming, I think, to be quite large. I mean, there's the ease of moving that money around is going to be very important, but then for also anyone out there who can actually access these kind of deals, you know, in terms of getting equity in a company like Bittrex as an example. That's massive. There's the old thing that, you know, during the gold rush, it was the people who were selling the picks and the shovels who, you know, made a lot of money. And yeah, investing in digital gold, which is Bitcoin, that's a good move, guys. That's a good move. But
yeah,
if you can actually get with these companies, go ahead.
Yeah, and we have seen that diversification. So our Bittrex investment did outperform Bitcoin, and exchanges have proven to be, you know, the investment that has produced. And again, I'm not saying you should invest in a company instead of Bitcoin. I'm saying Bitcoin is the core of this industry. You need to, you know, for your own sake, you need to play very small if you're new to this industry. You need to learn personal security. You need to learn two-factor authentication. You need to learn hardware wallets, and you need to have how to have unique passwords for everything you do. And you're going to need that anyway, even if you don't get into crypto. Crypto just accelerates that because, you know, it's your money on the line based upon personal security. But the trend that's happening is everything in the world is going to be all your hardware devices are all going to be hackable in the future. Everything you've got is going to be hackable, and you need to adjust to that. If you're using the same password for everything, you're doomed in the future. You just need to learn these things. If you're not using two-factor authentication, you're doomed in the future. Mm-hmm. And these can be stored on your own hardware devices. And cryptocurrency is just like an ultra high, fast way of learning. Well, when my wealth is on the line, I'm going to learn these lessons fast.
Exactly. It's your money, guys.
Yeah. So, you know, these are skills you do need to learn. And then, you know, once you're kind of in Bitcoin, then you might want to get more speculative, invest in alternatives that are doing different use cases, and then diversify into the companies that are going to benefit from the growth of the ecosystem. And, you know, it's not one or the other. It's kind of taking an investment approach to this around,
to the crypto economy.
It's a very simple thesis to me, and that is that I believe that the traditional financial system, because you can't own your money, because you can't spend your money, and because of the government's monetary policy, is a Ponzi scheme in the classic sense of the word Ponzi scheme. there's either going to be financial engineering that fix that, and central banks are going to create their own blockchain fiat currencies to allow banks to go bust and replace everyone's money with money that they fully control at the central bank level. They fully censor, connected to your passport. The user experience gets worse as you try and do things. The government, tax gets auto taken out, and then you have to go to court to try and get your money back. That's where that's going. Or it's completely unsustainable. It's going to have a crazy, disastrous event, which I don't wish, by the way. A lot
Nobody
of people
wishes that, but it's the potential reality.
And so I believe those two things, either mass financial engineering against your interest, or the mass devaluation of lots and lots of assets and currency, or the complete demise in a crazy Armageddon doomsday event. One of those is going to happen. I don't think it's the last one. And so therefore, this alternative does exist, and you can now own your own money, spend your own money, and transact outside of the traditional financial system that is independent of politics in an apolitical way, that doesn't care about unemployment in the UK, or doesn't care about the pension crisis in America, or doesn't care about if India wants to make cash illegal, or doesn't care about whether the banking system in Iceland and Cyprus says that you can no longer, we need to take your money. And it doesn't care whether the ATM is closed in Greece. It doesn't care about any of those things. It is just maths and code. It is apolitical. It is neutral money, and it gives the opportunity for freedom and sovereignty on a scale we've never seen before. You either do that because you're moving towards a greater future, or you're going to do that out of fear when there's disaster and you have to.
Simon, very, very well said. We're going to go ahead and finish it up there. That's I think, a very poignant note to finish on, without a doubt. Simon, thank you so much for taking the time to sit down and share some of your insights into the crypto industry with us. And for anyone who's interested in finding out more about banktothefuture.com, go to banktothefuture.com, but I'll also have a link down below in the description. So Simon, thank you so much.
Hey, thank you for having me. And as I said, education is the most important part of this piece. We've got a lot of people to educate, a lot of new people that need to learn about this. So keep doing what you're doing, and I really appreciate the content creators, especially during bear markets. They're the ones to listen to.
Thank you so much, Simon.